The run in the price of gold evidently has majors interested in selling off assets. After Newmont's massive divestiture program, which finished up last week, Barrick has now announced that they are selling off a major asset. But this isn't an operating mine like the majority of Newmont's sales. Instead, it's an absolutely massive development project that has been in the pipeline for decades, which requires billions of dollars in initial capex just to get the project off the ground. And that's if it can get the approvals required to actually get it into production. Let's dive in. Barrick Gold has finally made a decision on a project they have held in their portfolio since the $10 billion acquisition of Placerdome all the way back in 2006. The company is selling their 50% ownership stake in the Donlin Gold project in Alaska. The stake is being sold off for $1 billion to Paulson Advisors, led by John Paulson, who made his money betting against the housing market back in '08, and Nova Gold Resources, whom has held the other 50% interest in Donlin for literal decades. The $1 billion transaction will see Nova Gold up their stake to 60% in exchange for $200 million in cash, while Paulson will take a 40% stake in the project for $800 million in cash. Barrick, meanwhile, has also provided an option to the duo related to certain debt they have on the project, offering to settle it for $90 million if the debt is purchased before the closing of the transaction, or for $100 million if it's settled within 18 months of the transaction closing. Proceeds from the sale are to be used to bolster Barrick's balance sheet. Well, the company has also said they want to focus on long-life sustainable Tier 1 gold and copper operations. Yet they plan on developing the Reko Diq project in Pakistan of all places. But that's a different conversation. So what is Donlin? Well, it's a prime example of the Never Never program within the mining industry. The Donlin Gold project has been in the development stages for decades. Work on a feasibility study was completed by Barrick back in 2007, and yet the project was never built. The latest iteration of a joint venture on the project between Barrick and Nova Gold, which was 50-50, has been in place since the same year, following some litigation that saw Barrick's ownership reduced from 70% after an all-cash offer to acquire Nova Gold in 2006. In the time since, executives over at Nova Gold have made a career out of promising the development of the project, despite little progress being made on its development. The CEO of Nova Gold in 2024 recorded compensation in excess of $5 million, which follows compensation of $5.1 million in 2023, $4.8 million in 2022, and so on and so forth, despite no ounces having been pulled out of the ground here. But that might not be an entirely fair statement. The Donlin Gold project is found in Alaska, 450 kilometers to the west of Anchorage. The project is remote to say the least. No rail or road access is present at the site. The closest sign of civilization is found 20 kilometers to the south, where the village of Crooked Creek is located. The closest actual town is Bethel, which sits 250 kilometers to the southwest and is accessed only by boat and air, and the nearest roads are in the Anchorage area. So it's like very remote. And that means the developer of the project basically needs to build a self-sustaining town if they ever want to actually build this mine. A 2021 updated feasibility study listed a number of major pieces of infrastructure required, including a 44-kilometer access road from the mine to a planned riverport, an airstrip to support Hercules C-130 aircrafts, a barge cargo and fuel terminal at Jungjuk, a marine cargo terminal at Bethel, and its own power plant and natural gas pipeline, alongside the standard mine requirements such as a camp, waste management, mining and maintenance infrastructure, and so on. All told, the 2021 report estimated initial capital costs of $7.4 billion, while sustaining capital is estimated at $1.7 billion. But that initial capital cost is because, well, this is a big freaking mine. The Donlin Gold Mine is an open-pit operation that is expected to have a mine life of 25 years. Peak production is expected to process 155 million tons per year, which equates to 425,000 tons per day, a number that I can't wrap my head around. Over its first 5 years of operation, the mine is expected to average 1.5 million ounces of gold a year. And over that 25-year mine life, production is expected to average 1.1 million ounces of gold. Current mineral resources are estimated at 39 million ounces of gold at average grades of 2.24 grams per ton. The technical report, while not providing the typical cash cost or all-in sustaining cost metrics, suggests that operating costs sit at the $635 an ounce mark, while life of mine capital costs sit at $300 an ounce, with closure costs adding a cost of $10 an ounce, which brings total operating, closure, and capital costs on a per ounce basis to just $945 an ounce. In terms of NPV, Donlin, as per the 2021 report, has a net present value of $3.1 billion, an internal rate of return of 9.2%, and a payback period of 7.3 years, which is based on a 5% discount rate and $1,500 an ounce gold. The current $3,400 an ounce gold price probably improves those metrics quite a bit. Okay, so back to the transaction. On Barrick's end of things, it's a rather straightforward deal. Sell a 50% interest in a project that is extremely capital intensive and has a lot of moving parts, in exchange for $1 billion in cash. For Nova Gold, it's a bit more complicated though. First, in an effort to secure the $200 million they need to increase their ownership by 10%, the company has entered into an arrangement with Paulson, who also happens to be their second largest shareholder and has been since 2010, along with the Electrum Group, who is their largest shareholder, along with Kopernik Global Investors. Those three parties have agreed to provide $170 million in capital to Nova Gold via the purchase of shares at $3 apiece, which was a modest discount to Monday's $3.11 close and a massive discount to the Tuesday close of $4.35. Nova Gold is also set to issue 25.5 million common share purchase warrants with a 5-year expiry and a $3 per share exercise price in exchange for those funds. The remaining $30 million will come from Treasury. On top of that, Nova Gold is set to look around for other funding options so that their partners don't need to fork over so much cash. But there are no hard requirements here. Basically, it's a backstop agreement. On top of that, the transaction remains subject to regulatory approvals, with a closing slated to occur late in the second or early in the third quarter of this year. So what's in store for Donlin? Basically, Nova Gold and Paulson have stated that they're going to pretend they are all equal partners in the arrangement, sharing the responsibilities of project management. The duo aim to immediately focus on updating the current feasibility study on the project, which no doubt has been influenced by the recent run in the spot markets. Billions will be needed to develop this project, and the better the economics look, the easier it will be to raise capital or to find a partner that has experience dealing with projects of this scale. Current exploration, meanwhile, will shift to focus on resource conversion and expansion, with future programs to look for new resources along strike and to depth. The joint venture also aims to advance technical work and engineering design while working through the process of obtaining the required permitting. At the same time, current budgets are being reviewed and reworked in light of the transaction. All right, so let's wrap it up. Overall, the transaction appears to be a net positive for Barrick. As per TD, the $1 billion the company managed to secure from the project is more than the carrying value, and it was a non-core project, so they see it as a win-win. Investors seem to agree with that sentiment as well, with the itinerant musing of the view that the project wouldn't be built this cycle if ever anyways, while Mark IKN views it as the best move Barrick will make all year. Yellow Lab Life thinks Bristow will be popping the champagne bottles on the news. Well, the wealth miner views the transaction as a sale of stake in worthless moose pasture to an idiot who was right once 17 years ago. Rarely is the mining sector in such agreeance, so the sale appears to be an outstanding transaction for Barrick on all accounts. As for Nova Gold, well, now they need to get to work to prove why they were the smarter party in the deal. All right, everybody, thanks for watching. We've got mining earnings season right around the corner, so get ready for that. Also, if there's stories you want us to cover, let us know in the comments section. If you enjoyed this content, smash that like button, subscribe, please share it. All right, everybody, thanks for watching.